Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money moves that make the world go round. And let me tell you, this latest SEC filing from FOXO Technologies Incorporated is a bit of a puzzle. So, what is the big story today? FOXO Technologies Incorporated is basically telling us they've swapped some old debt for new stock, and we need to figure out what that really means. Before we dive in, if you are here for clear, no-nonsense breakdowns of financial filings, make sure you are subscribed. And hey, we've got a thriving Discord community all about dissecting these reports, link in the description below. Alright, let's get into it. FOXO Technologies Incorporated, or FOXO as we'll call them, has a filing that is pretty straightforward, but the implications are what we're here to decode. This filing is all about a deal, specifically an agreement to exchange some debt, which they call prior advances, for a type of stock called Series E preferred stock. Think of it like this: companies sometimes borrow money. If they can't pay it back right away, they might offer a piece of the company in exchange for forgiving that debt. This is a way to get a clean slate, financially speaking. So FOXO owed $200,000. This wasn't just a casual loan, it was money advanced to them over a pretty short period from the 4th of December to the 10th of December of last year, 2025. Now, instead of paying that cash back, FOXO is giving out 8,000 shares of their Series E preferred stock. Each of those shares has a stated value of $25. That brings the total value of the stock issued to $200,000, exactly matching the debt. It is a clean swap. The debt is gone, and in its place, the creditor, which is a company called Renova Health Incorporated, is now a shareholder. Now, why is this interesting besides just a debt restructure? Well, this stock wasn't sold on the open market. FOXO is saying these shares were issued under an exemption from registration. What this means is they didn't have to go through all the usual hoops of registering with the securities regulators because they believe it was a transaction not involving a public offering. They're basically saying this was a private deal, and the reason they could do this is because Renova, the company receiving the stock, is what is called an accredited investor. In simple terms, an accredited investor is usually someone or some entity that has a certain level of wealth or income. And the regulators figure they can handle the risks of investing in private deals without needing the same level of protection as the average person. Renova also promised they're buying this stock for investment, not to immediately flip it or cause other issues. This kind of move can be a sign of a company trying to manage its cash flow. When a company is short on cash, converting debt into equity can be a creative way to stay afloat. However, it also means diluting ownership for existing shareholders. More shares out there mean each existing share represents a smaller piece of the company. The report itself is dated the 6th of February 2026, and the agreement was effectively made at the end of last year, 2025. This timing is important. It shows they are addressing this debt situation and formalizing it very soon after the advances were made. This filing also points to an exhibit, the actual agreement document, which is attached. We don't have the full details of that agreement here, but this is the official record of the deal. Looking at the broader picture, FOXO Technologies Incorporated is a company that is being in the news for various initiatives, often related to technology and health. This particular action, while on a relatively small financial scale compared to their overall operations, speaks to the constant balancing act companies perform between managing debt and maintaining ownership. Issuing preferred stock, as opposed to common stock, has its own implications. Preferred stock often comes with certain voting rights or dividend preferences, which can give the new shareholder Renova a different kind of stake in the company than a regular shareholder might have. Now, here is where we put on our analyst hats. This exchange, while clearing a $200,000 debt, also means that $200,000 worth of the company's ownership is now tied up in this specific preferred stock. For FOXO, the immediate benefit is removing a debt obligation. The long-term effect will depend on the rights and future performance of this Series E preferred stock. If the company does well, Renova benefits. If not, the nature of preferred stock can sometimes make it a less liquid investment than common stock. My take on this is that it is a standard, if somewhat unexciting, financial maneuver, it suggests FOXO is being proactive about its financial obligations, which is generally a good sign. However, we need to remember that issuing stock, even preferred stock, is a form of dilution, and shareholders should always be aware of how their ownership stake might be affected. It is a sign of a company managing its way through, not necessarily a sign of explosive growth or deep trouble, but rather a necessary step in its financial journey. What is really notable here is the quiet nature of the transaction. These types of exchanges aren't front page news, but they are the nitty-gritty work that keeps companies operating. They are navigating the tightrope of balancing immediate needs with long-term shareholder value. So to wrap it up, FOXO Technologies Incorporated is cleaning up a $200,000 debt by issuing $200,000 worth of Series E preferred stock to Renova Health Incorporated. It shows them managing their finances actively. Keep an eye on how this preferred stock performs and what impact it has on future shareholder decisions. Alright, that is our breakdown of this FOXO filing. What is your take on this debt? For equity swap, do you think it is a sign of smart financial management or something to watch out for? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and be sure to subscribe for more deep dives into the world of corporate finance. And don't forget to check out our Discord community linked in the description. Thanks for watching, and we'll see you next time.